One of the biggest questions on the cattle end is why are we seeing these prices hold above last year levels so well, and why are we seeing this market come off a little stronger than expected right now from those summer lows? One thing out on Friday was an update on beef trade. Exports are still doing very good, 18% for the month of June, so certainly we're pushing exports right now pretty well on the beef. Also, we do see some lower weights, and we did see back at the beginning of July, weights actually were getting very close to last year levels. So right now, as you can see, we are still running a little bit lower than last year. With all this heat and the impact of these cattle here in the plains next few weeks, we're still going to see some of these problems show up on the weight end. So a little bit less weight being a secondary issue we can point to. With that in mind, we've also got the consumer demand being a very big question right now. That's the hardest part of this beef deal, to figure out demand here, because you don't really know what it was really until we're all done with that period of time. So projecting out numbers, we do think that the economy's recovered a little bit here for the second half of this year, and obviously just look at these green dots, which are cash cattle prices. The market's kind of telling us something right there by itself. With that in mind, we're going to have to change our viewpoint. Instead of waiting until really until mid to late August before we can start to get bullish on this thing, it looks like we kind of missed the boat in the first half of this little move here. But as it stands right now, futures right now saying we'll see something around this 96, 97 range for a good chunk of this second half this year, and possibly we'll see some higher. Our numbers are for $98 for a high end for beef cattle. One thing I want to point out, though, is on this April, the 2011 contracts. We've had some guys ask about these here. On these April contracts, we're trading right now $100 roughly for the April. That's equal with what we did this past year, 2010. Keep in mind for 2011, you're going to knock off another 1% off supply. At the same time, you're also looking at hopefully beef demand improving. So with that in mind, we got futures right now trading the exact same as 2010, yet tighter supply and better demand. I think reasonably, April cattle maybe up to 105 without getting too crazy here. So with that in mind, you've got to keep in mind that you're a little better than expected on the cattle. As far as the pork end, I just want to point out two quick things here. Number one, as far as the exports, we are running much better than last year, up 22%. But keep in mind, this is right during the time we had all that swine flu stuff happen. That happened in late April, and it affected those May, June, July, and August exports. So numbers on the pork end look good, but keep in mind we should look good just because they're compared to such a poor year last year on the exporter side. As far as the hog end, we've got to point out that there's a severe drop-off coming in prices for cash hogs. And that's what futures, which are these dots right here, are implying. One thing I'm still kind of concerned about is instead of a straight-down market into no, the futures are right now saying they have the exact same for October and Dece. Bottom line here still looks like these contracts are overvalued on the hogs, that they're not taking into account the full decline. So still a little bearish, more so on the Dece right now than anything else here for the hogs for the near term.